I'm Nick Wells with Resource Investing News down at Cambridge House in Vancouver. With me today is Dr. Martin Murenbeeld with Dundee Capital Markets. Thank you, Dr. Murenbeeld, for joining me today. I appreciate it.
My pleasure.
So just kind of first off, just to kind of touch on the news of the day today, what were your thoughts on Goldcorp buying Pro?
Well, I thought it was interesting. Personally, I don't get too involved in the analysis of corporations. We have other people at Dundee that do that. But it probably suggests that maybe some of the what do I want to say? The animal spirits are beginning to stir in the gold market, and I think that's nice to see.
Okay. Do you kind of envisage any more kind of major acquisitions like this in the gold market?
Well, certainly, I think if the gold price continues to rise on not in straight line, of course, but if it continues to pick up as it has, I would expect that.
Okay.
Yeah.
So kind of pulling out to the larger, bigger picture view right now, the Swiss franc decoupled from the euro, which has then kind of impacted gold prices. What do you think the longer term impacts of that are going to be?
Well, I think the Swiss decided, that with the ECB very likely now to do a fair bit of quantitative easing, that there was going to be, just an absolute wall of money coming out of Europe into Switzerland. And in order to keep the Swiss franc at the cap of 120, the Swiss National Bank was going to have to buy an awful lot of euros. In fact, over the 3 years or so that it has got the cap, the Swiss National Bank has bought about 200 billion in reserves. And one of the things that led to was the Save Our Swiss Gold program back in November of last year, where a number of people felt that these reserves the Swiss National Bank will buy ought to be reapplied to gold. So there was some concern on the part of the Swiss National Bank that it did it the way it did it during the week, not on a weekend, was a big surprise. Normally back in the old fixed exchange rate days, these things would happen on a weekend, not in the middle of the week. And maybe Swiss National Bank lost a little bit of credibility because they certainly kept saying that the cap was inviolate, it's in, and so forth. What it's done to gold is interesting because those people who hold euros and would like to hold something else, but not U.S. dollars, because U.S. dollars would normally be held in a U.S. dollar account somewhere. And if you are, for example, a Russian oligarch, you might not want your money to be, directly or indirectly under the hand of U.S. legislation. You were, keen to move that money into Swiss franc. Now, with the Swiss franc having gone up so much and the Swiss National Bank charging you 75 basis points to keep your money there, it becomes, a default for gold. Swiss franc loses some safe haven and gold gains some safe haven status. I think that's the play there.
Okay. And just touching again on that kind of larger European picture, what have you made of Russia kind of buying all these kind of record amounts of gold over the past couple of months?
Well, it's actually been for some years now. I was at a conference back in 2005 in Johannesburg where one of the Russian central bankers were talking about raising Russian gold reserves up to about 10% of total reserves. So we knew that Russia was on a plan to increase gold reserve, and I think that's been accelerated in recent years as Russia and other countries, frankly, have become, in essence, less interested in holding U.S. dollars because of the possible political ramifications that are included there. So, you can, and in fact, it happened, where the U.S. would apply sanctions, and if you start sanctioning, U.S. dollar accounts, then that's a quick way of telling people don't hold your money in U.S. dollars. And so I think that message was made loud and clear to the Russians, and so that's one of the reasons they're interested in holding gold.
So, say 12 months down the road from now, what do you think the price of gold will be?
Well, we have a forecast which puts gold up close to $1,300. You know, if I were just to pick a point, 12 months from now, our average for the year we just submitted to the London Bullion Market Association in their roundup, and we had 1255. That doesn't sound too exciting, but there's still some headwinds for gold. My bias is to actually look for gold to be a little bit higher. So I think if I'm going to be wrong on the forecast, I'm going to be wrong on the low side. So I think things are starting to change for the better in the gold market, but it's early days.
So what do you think then could be helping, be a helpful impact for that gold price then in the coming months?
Well, there's a number of factors. I mean, we've got ongoing demand in China and India. China took in an awful lot of gold in 2014, much more than we had expected, given that it took in so much in 2013. China will have some financial problems, which may then encourage locals to buy more gold. So I think we're going to see a very good gold market there. We're going to continue to see central banks buying gold. I think the other thing that we're going to see, which is going to be somewhat unusual, we could see gold rise against the dollar, even though the dollar is rising against other currencies. Okay, that's an unusual development. In theory, this can happen, but in practice, we don't see it often. We have seen it, most recently when Europe has crises. The euro goes down, the dollar goes up, and gold goes up against both the dollar and the euro. I think that's the sort of thing we could see as well. The other thing that I think is we've run to the end of the ETF selling cycle, the gold ETFs. I think that's what I was just saying at my presentation here a few minutes ago, that was the seminal event in 2013. You know, massive sales from the ETF sector. And I think that's going to turn into either zero or buying in 2015. So I think that's... and then we've got geopolitical issues and other financial issues, crises in Europe. And so I think that's all going to work in favor of gold.
Okay. Well, great. That's all I really have to ask today. Oh. Thank you for joining me. Dr. Martin Murenbeeld is the Chief Economist for Dundee Capital Markets. For Resource Investing News, I'm Nick Wells.